Yeah, well, we're going to go ahead and go live here. Good morning, everybody. I'm going live on YouTube with this. We are looking at our B4 CoPilot Pro over here on the right. It is an order flow engine. We have a host of a library of order flow signals right here. I have three things selected. I have unfinished auction. I have delta divergence. Those are two popular order flow signals with our system that I particularly like. We have also selected our chart indicators. I have my new, we're still in the process of building and testing it, but it is our Ichimoku Shoyu over here. I have a few choice signals selected in here to be read within our B4 CoPilot Pro. One of the new features with CoPilot Pro is you could feed your own custom indicator or strategy into it and send those signals over to here. That's right here in our chart indicators library. Right there, you just select that. That will allow you. One thing I can show here is we like whenever we look for the end of the moves around 3 with the lower B4 indicator and around -3. When we lose our trend background and that little trend line right there crosses over the top line or the midline, those are times to think about getting into a trade. That's usually whenever your trend is exhausted. That's what happened here. We got an order flow signal, an unfinished auction right there. Got us into this trade. I'm going to go ahead and guard, protect the position. No matter what, we got a good trade here. I'm going to zoom in. Now, yesterday I did very well in the morning, and then right after that I turned around and did very bad that morning. Turned a good morning into a bad thing, and I turned it back around in the afternoon with the bearish position yesterday, but it was a tough situation. Today, here we are right off of the open. We're using 3 contracts. Now, this is I'm just forward testing this morning. I do not trade at all on Fridays typically, unless I had a really bad week and I find a good opportunity. I typically stay away on Fridays. Made some improvements last night. Was up to 1 o'clock fixing the Shoyu. Found a little bug this morning, but got the trend background working nice and clean and with a flow to it. Making some other improvements. I will be giving that to Barb. Hopefully this weekend for him to start looking at. Let him go through it, clean it up. All right, that was a Shoyu entry that got us in there, I believe. Or was it? Well, possibly an unfinished auction. That position, though, happened right here. Boom. Okay, yeah, we got to break that buyer right there. Now we're coming down here. We're at a possible support again. If we break him, the next area would be down here, possible support, and that lines up with the high volume nodes there and the value area here. Ichimoku wise, this is a possible cheek-out trail opportunity to the downside.
Order filled.
And it doesn't look like it's working out there for the bears. On my order flow, I have it set up here when it actually enters a trade automatically. I have an opposite signal right here to reverse on opposite signals. And that's what we just did. And what I typically do is I will, if it gets me into a trade that I'm not comfortable with, I will adjust my risk.
Order filled.
And that has flipped me 2 times there. I'm going to turn, I'm more comfortable with the downside. I'm going to turn off the reverse and I'm going to turn off long signals right now. That's my bias. And that's the only thing I really want to look at. I don't want to get flipped again right now. I want to at least get whole here. And manage it here. This is the cheek out trail move that I was looking for. It just pulled back before it made the move. And sometimes it does that.
Stop filled.
What is cheek out trail? What I do is I look at the price curve. I just call it the price curve. There's a curve right there. We expect cheek out. A lot of people tell you to take a cheek out off your chart. What we do is we look at how the cheek out reacts to the price curve. It will usually respond in kind. And unless we get to a point to where we're crossing over and price is going to cross through the Kumo, then it may break on through. For the most part, we look at the cheek out trails, what I do, and form my biases from what we see the cheek out. Okay, I got short signals only, and I got opposite signals to do nothing. Now, one thing that we can do here is I can also,
order submitted, order
with
filled.
our Pro Trader interface right here, place resting orders on the chart. That got us in right there where that would have actually entered us. Looking over here, we're at one of these previous support areas. It's broke through it once. Let's see if it wears it on down here. Looking at a support here, possible 69.24.25. Boom, that's going to be right here. That ends up being right here where our go long level is. Now, these levels are laid out for us every morning. We have certain trade setups that we typically take. What we're doing now is scalp, and if we get to a bigger trade setup getting confirmed, we'll take the size up to 6 or 12 contracts there. We're scalping with 3. Now, when I use the term scalping, I'm not referring to the length of the trade as much as I'm talking about the sizing. we've turned over to the bullish positioning here with the lower B4 indicator, so this is probably going to take me out here. I'm going to give it as a full chance to.
Stop filled.
We're going to turn long back on. And we got choices here. We got break even, reverse, none, and exit. I'm going to go ahead and put break even on. Let's see if it's going to break through the cloud here. Got a potential TK cross with our show you dots. That's right here. But it doesn't have a lot of momentum in it. If we get that Kumo twist, it may break. We need to break above the cloud. And see, this was a bullish 30-minute candle. This is bearish still. Couldn't run up above here and couldn't break below here. So I'm looking at price action in relation to where it is in relation to the point of control and the value area. Just so you know, these red and yellow, those are imbalances that happened on the 30-minute time frame at those different levels. Chical still, well, we're lagging one candle behind, but it's still below price right here. NinjaTrader doesn't print the current candle. It locks in the last candle and shows here. We're still basically with the Chical below the candles here. We need a break above the candles, break above this cloud here with the Chical, which will put price breaking above here for the bulls.
Order filled.
Okay. We had some price action confirmation here. A lot of people came in with an unfinished auction right there. Unfinished auction here at this level, unfinished auction here. So we had some heavy hand participants go ahead and place some trades right there to push this move up. What do we look like with the lower B4? So I'm constantly going through here, going through Ichimoku, looking at our lower B4 indicator to see how much room we have on the move. Remember, at about 3 it turns around on us. It goes bearish. On about -3 it turns around and goes bullish. Our continuations happen at the 0 line typically. Or pullbacks and continuations. Keeping that in mind, or keeping support and resistance in mind, we are at VWAP. I'm going to be cautious here.
Stop filled.
One thing I like about the system, if I shut it down instead of taking the heat at these positions, we usually get another order flow signal if we cross over a major inflection point. So for that reason, I was happy to guard that position.
Order filled.
Take what I could get, and if it breaks over that position, then order flow will give me the signal to get back in. So I'm eyeing this level right here, the 69.28. We'll go ahead and guard here. Make sure we just pay for the trade. Again, I'm not live trading this morning. We're just sim. It couldn't close above the cloud here. It got caught up in this mess. The Chicow got caught up in this mess here, and we got a rejection from the cloud. And somebody just took a shot at me.
Stop filled.
He missed. So I'm looking here, I'm looking at the distance between the Chicow and price, just an average right there, and I'm thinking that's a possibility of the length of the move here. One in the middle.
Order filled.
I'm not going to move it. I got to manage this. We are close to or below the zero line. Okay, so that's better. That looks okay. This looks okay. Comes down, end wave right down to here. Boom. Where I measured it to. The midpoint, pretty much where I'm here. The end of it right there. That is at 69.1725. In Ichimoku, they teach that price ultimately moves in a series of N waves. That's bullish. So for that reason, I'm going to pull my risk down. A D-line cross, it has to do with the direction line. We can see we lost the background here, and the B4, lower B4 indicator crossed over the trend line here. It hadn't crossed over the midline yet, but you know, you get ready point, depending on how aggressive you are, you know, get ready when you lose the trend background. Set up your trade whenever it crosses over this point. Measure your risk to reward or whatever your process is, and execute when you close there. You can very well do that with the system here. It's you try to set it up as a 1, 2, 3, but it works very well here on the 210 chart with the lower B4 indicator. It's a very, very clean oscillator. We're at, you know, right around the zero line here. And it's just chopping here this morning. Very hard to trade this. Not trending for sure.
Stop. Order filled.
Very choppy little area. You got the cloud going sideways, the T and K paired up together. And right at the zero line here. So everything says consolidation and chop. So could be a good time to step out and not trade. Typically, it's a good idea not to trade when the Chicow right there is in the candles. That's typically a tell-all, hey, stay away from it, it's choppy. Ichimoku is designed to be able to look at the chart immediately and tell, okay, are we trending or are we chopping? Well, Ray Charles can see we're chopping just looking at the candles, the wicks, and looking at that. But even if that wasn't the case, you should be able to look at the Ichimoku and say, okay, this is balanced versus imbalanced. This is what imbalance and trending looks like. This is what balance looks like.
Order filled.
So if you are going to trade in a balanced state, you can adjust by, you know, hey, I'm going to scale down.
Stop filled.
If we break it here, there's a possible trade opportunity between there and the mean, 69.4450, depending on what it does here. We still got room. Well, we're at 2, but it's still got enough room to make it up to 3.
Order submitted. Order filled.
We had a lot of volume here. And some volume here. I'm thinking when we break through that area, we're going to skate all the way up to here. That's why I went ahead and placed a resting order up there. We made it exactly to where we expect it to go. We need to protect.
Stop filled. Stop filled. Order filled.
This is another major line right here. Notice where the volume was building on that candle at the top side. That means that's bearish sentiment. Just going to tighten up a little bit here, make sure I get the maximum, give it some room to dance. But that's bearish.
Stop filled.
You're in a bullish position. The volume builds up at a major inflection point at the top side of your candle. Bears are filling that up. Bears are coming in here. Where are we at on the totem pole? I'm not into idolatry, but this is where we're at on the high end of the. We're on the high end of the move. We're looking for shorts. If it does push, it may push to the top of our bracket. If not, it's going to pull back, maybe pull back to here or here, and then regroup again.
Order filled.
It may pull down to the 0 line here. below there. There you go. Stay below there. Just come in here. Just put you right here. Let's see. I need to stand below that value area right there. I don't want that value area going up. There you go. Come on down. Need to break the support here. Come on down to here. That puts this coming on down to the, about, close to the 0 line. Puts this as a pullback to touch the Tinkinson, where the Tinkinson and Kijason's flat. There's that move. You need to guard that. That's coming back and touch. I didn't realize VWAP was there too. Okay, so this makes sense now. If it's going to continue, maybe another candle. That puts that coming down to this area and that area, the top of the value area. So there's volume here.
Stop filled.
We're coming into that volume. That volume happens to be at VWAP, the edge of that volume right there. So on a 50% retracement of that candle, we can look for a re-entry, a full entry there if we'd like. But I'm looking at this level here. I'd probably go right there.
Order submitted.
With a submission. We came down to the 0 line. Look right here, guys. Right here on the 0 line. Happens to be VWAP. Happens to be the point of control here. Happens to be the edge of the volume right here, meaning bullish power here. Happens to be what price is doing. Let's see if it's going to continue. We come here. I anticipated it coming down to here when I was measuring. Let's go ahead and pull it down to the Keijin. It may go a little more. Turn this
Order
off.
canceled.
Because if I have it on, it won't take a trade for me. I'll let it, if order flow tells me to, I'll let it take a trade, even to the bearish side. If order flow pushes it, I'll just manage the risk. What does Chico Trail look like? Excuse me. I always look at that. It says, hey, there's a possible push up, a pullback, and a hard push. We're at dynamic support right now with the Keijins. And remember, your Keijins and Tinkinson are your dynamic support and resistance. Over here, we don't have that bottom wedge line. It's wedged here. If it does break this area, then we can expect it to come down to R2 and here.
Order filled.
All right, we had a bunch of an unfinished auction there, which is the heavy hands went ahead and sold off there. I need to get some sleep. I'm going to minimize this.
Stop filled. Order filled. Order filled.
Because I think it's holding true to my little analysis here. I'll go with my analysis, and order flows telling me the same thing. We're at a touchy place right here. We're at that mean.
stop filled.
Zoomed in here to get a better look where the volume was here, so I knew where to protect my position. This is our brackets, guys. Those are institutional levels where price usually respects in brackets. If it breaks out, it'll do it with some abundance, and you can take good breakout trades from it. But for the most part, you want to tread lightly with it, typically, because they are high probability reversal points. But we still got room here in this case with the B4. The B4 saying, hey, we're long and strong. We probably can make it on up to here. I'm going to go ahead and get out of that while I'm, where am I at here? I still got, let me close this.
Order filled.
And made it to my, now guys, we don't always get these things 100% correct. You know, I sit here and I measured this one where a possibility of it coming down to here. It didn't make it. I'm not heartbroken about that. I'll put myself out there every time with my Ichimoku analysis because I'm not scared. If it doesn't work out, I have enough of them that do to overcome, you know, things that don't work out for me. We said it'd probably come approximately right here. It did. We said it'd probably go to approximately that measured move. It did. You gotta learn the Ichimoku.
Order filled.
Learn your order flow. Learn how to read your volume profiles. I'm putting that together with our institutional levels, with our footprint charts and our major levels that we're getting from our strategies. Combining all that. Now in this instance right here, if I was live, I wouldn't be risking no more than that right there. That'd put me at about 300, 200. Probably 300. This is our kiss dots firing. This is saying it's time for price to kiss the Tenkan for a pullback here. That's 69.44, so we need to keep an eye on that. It means we're barely going to have any room to probably profit here if it goes down. It could be, we could lose this. So for that reason, we pulled down here and went ahead and reduced the risk. Excuse me. We've got a lot of buyers stepping in on it. Retailers are buying it up. Market makers are going back and forth. So a lot of people got their eye on this area. And I notice what's happening. The volume's coming up. What that means is, guys, one of the things that I typically do is whenever I have volume building on a candle like this, look at the volume down here. the very bottom row. 60.98. I mean, we're look at it compared to the other volume on those rows. There's a lot of interest here, and whenever it gives, it's gonna give. So for that reason, I'm in a short position. I'm gonna protect capital and pull this thing down to minimize exposure there. If I wasn't in a position, I'd be putting a buy order above here or a sell order below there. And I could do that with a buy chart or sell chart right here. You see all that volume building. It's going to go one way or the other. Well, you could lock in and say, okay, when it gets going, I'm going to be able to probably lock in a profit. In this particular instance, I want to guard because remember that's a little bit less than I expected. It's going to be about 150.
Stop filled.
$37. That's a bean burrito for the morning. That's lunch at Taco Bell. I was going to shut it down a while ago, but I was talking and didn't shut it down, but it's all right. Let's see what it's going to do here. What you're expecting when these kiss dots fires is for price to pull back and test the Tinkinson. We've already tested the Tinkinson here. This could come down to the 0 line here and bounce back. Either way, there's a lot of... So let's do this. We were talking about it a while ago. We got an opportunity to do it. Let's just...
Order submitted.
Test that there. Let's put a sell and a buy.
Order submitted.
I need to be above that. That's it. I need to be below that. So when we break out of here, we should break out. And I'm going to turn the strategy off. Oh, excuse me. That was my Keynesian flat alarm right here. When the Keynesian's flat, price usually stops out, returns back to the Keynesian.
Order filled.
Guys, you'll have to trade at your own risk. This is not trading advice.
Order canceled.
We're approaching the top of the bracket and high of day. It's time to lock that in, but leaving it room.
Stop filled.
Volume built heavy on the candle at a major resistance area. Volume built at the top of the candle. Engulf this candle. That value area. I'm not interested in bulls again until we get over this area here. I could come here and the same thing I did a while ago, place a resting order above this value area, place a resting order below that value area. Oh yeah, I forgot I had it unarmed. That would have got me in this trade.
Order filled.
The reason I'm drawing this line right here, you may be wondering, what am I doing with that line right there? That's a forecast line. You have a pivot high or pivot low above your cloud, above whatever, or below. It doesn't matter. You come in, you draw a line, measure 26 periods out. That's why I was counting the candles. I don't have the correct tools here. In TradingView, I can put an info line there and make it show it's 26 long. I don't know how to do that in NinjaTrader. So I was just kind of counting. That's about 26, rough guesstimate. You use that to, price will usually follow that or break out of that. If it breaks out, it's like drawing a pendant or a flag pattern. Ichimoku doesn't have all those 100 and something, 157 or whatever patterns that you have in the Western analysis. They only have a handful, and this is one of them. This is called a forecast line. You have a pivot high or pivot low above your, above or below your cloud. You draw those lines. That's why I drew it here. And we broke. This is where we got to break here. That's what I was looking at here.
Stop filled.
Letting it stop right there. We built volume at the high of the candle. I know that my show you will get me back in if we
Order
have another.
filled.
There we go. If we have another push. Okay, so my show you dots are now showing cashed. I gotta make a note.
Stop filled.
Show you dots are showing cached output. Show you dots are now showing cached output after the
Order
change on
filled.
site. And check Chical coloring logic. Check Chical coloring logic again. Alright, taking some notes on what to do with my show you indicator. I made some changes to it last night. This used to update live, and now it's caching the show you dots there, so I need to go back and refine that. Other thing is my Chical coloring. It's usually trend colored. With my candles, it's not. It quit. It was doing that at first this morning, then it stopped. So I gotta check that. That's why I do forward testing with my indicators. I got my background fixed. That was the main thing. That trend background. That was the hurdle. And I got that smooth and working, very lightweight, and that was the hardest thing for me. So these other little things are just glitches I'll go through and fix. And that was the major issue. It was too heavy and paused my chart and caused it to drag, not be able to drag like this. Alright, back to where we're at here. I got 187 in the pot. I wouldn't risk keeping $50. Just so I still got my bean burrito. Alright, burrito time, baby. Notice the POC lining up flat for both candles. Notice the point of control here. There is the point of control here.
Stop filled.
When that happens, you got to guard it. When those point of controls agree with one another, price stops, you need to guard your position. We're at 2.7. We're kind of extended. We can let it take another trade. Thinking coming here to 9,600. Let's look at where our measured move is, 96.50. So somebody got their eye on that. They're measuring the market just like we do in N waves. Somebody got the same idea. Yep, and somebody had volume here. So they're all lining up. Right here. Let me get that right. Oh, there we go. And that's lining up with that perfectly. Notice how the smaller candles got the most volume there. The big candles here got the most volume there. They line up perfectly. That's a key point right there. The 96, 62, 25. We want to keep our eye on it. Right up in here.
Order filled.
So, with that being said, we get in a move here. We look at where we stand here with our money, and we're like, okay, well, what do we want to do? Do we want to risk all of the cheese, or do we want to protect the cheese? Well, our goal is to protect capital. That's our number one goal. If we protect it, everything else will fall in place. So I'm going to guard that a little tighter than what I normally will. That'll take me out about $300. If it takes me out. If it pushes, I want to act fast. Now I'm laying it here. I usually hover this. I'll usually be hovering here and be ready to drop it. Well, I'll hover it now. So I'll go ahead and drop it there. I don't really like this trade. Notice what happened here.
Stub filled.
When those line up, when those points of control, when those points of control line up together on the same level, it's time to guard that. It may still continue, but if you're scalping, that's time to say guard. Now, notice where we're at over here on our drawing. It wasn't just me. Other people are looking at those N waves. Remember what we were teaching about counting candles, Paul? Remember 5 candles is an average push? 1, 2, 3, 4, 5. A hard push is 9 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. Remember what we said about a pullback. An average pullback is 3 candles, right, Paul? 1, 2, 3. How many candles is that? 3 candle pullback. 5 candle push. 9 candle hard push. Now I'm going to turn this off. I got some other things I'm going to attend to today. Let me kind of address where we're at on the overall picture here for you guys. I got to go back. That done aggravated me. My show you dots were perfect and acting very responsive. Now they're delayed. They're doing a cached output. So I got to fix that. I'm wanting to go take an early lunch and fix this today so I have it ready. I want to get this to Barb this weekend if I can. Anyway, let's look at the overall picture of things where we are. You guys that are in the trade room, you know what I think about this area right here between the go short and the long breakout. Just exercise caution if you're going to trade. If I trade that area, a lot of times I'll scale it down. It could be choppy here in this area for you. So keep that in mind. You guys in the trade room, you know the preferred setup that we can get into with the scenario that we opened today. You know the 2 trades opportunities we have. We have an if-then situation, and we could take those trades heavily if they line up. Of course, it is Friday. Keep that in mind. Ichimoku wise, let me remove drawings. Paul, did you understand what I was doing with these lines right here? What those are, let me I'm gonna go ahead and move this. Delete. I'm gonna delete this. I want to show you that. Make sure you got that before I go. I want you to know what that is. I teach it in our AMP course. I'm going to blow that up real quick. I'm just going to use a guesstimate here. I'm not going to go through and count and all that stuff. I'm just going to say that these are 27 bars long. Whenever you get a pullback, sorry, it's not oh, I know what it is. It's catching the. There we go. We'll have to do this. When you get a pullback and a pivot over the cloud, you count out 27 bars long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. It's actually 26. I said 27. 26. And you pull a line. You pull that to Cinco span A. You do the same thing to Cinco span B. If I can grab it without, there we go, without doing it. In this case, Cinco span A and B are in the same place. No big deal. That forms what we typically look at as a flag pattern in Western analysis. I go ahead and I put another little deal on here because that's a trouble spot. And I lay that out at that pivot. Typically, if it's going to keep on going to the cloud, it's going to stay within those lines. When we get to the end of those lines, if you're above those lines, you're bullish. If you're below those lines, you're bearish. If you're in between those lines, say there was a gap there, let's say that there was a difference between where Cinco span A and B. If it ended up in between there, right there, you're neutral. Right now, we're pretty safe to say we're bullish. We broke over that line. That's a buy point. This is a definite buy point. This is an early entry. If you're going to put your toe in the water, and if you're going to get heavy on it, you put it after the close of this candle above that line. Anyway, that's forecast lines. We broke over that line. We're up here now. Anyway, we're pretty high, elevated. We're at 3.12. Remember, we look at the B4 indicator right here. It's typically, we look at our zero line for our pullbacks and retracements. We look for our overextended or overbought at +3 and oversold at -3 on these 210 bars. Anyway, that's going to be it for me. I'm going to work on my indicator, and I might go and do a little trading this afternoon. We'll see. Any questions, guys? All right.